Welcome to the Liquidity Event, a show about all things personal finance with a laser focus on taxes, financial independence, and equity compensation. Hosted by AJ and Shane of Brooklyn FI, each episode will focus on a personal finance topic, some driven by news headlines and sometimes driven by listener questions. And sometimes you'll just get two money nerds rambling about what they think is interesting. Just a quick note before we get started, this podcast is for informational purposes only and should not be considered tax or investment advice.
Hello and welcome to episode 159 of the Liquidity Event. I'm your host, Shane Mason.
And I'm Allie Jane Ayers.
And for redundancy's sake, this is episode 159, being recorded on October 1st, airing on October 2nd. Hot damn, that's a fast release. Out the potato, into the oven, as AJ would say. Email us your finance questions. Liquidity Event, liquidify.com. We will answer them on the air.
It's really raining potatoes over here.
It's raining bats and frogs.
It's raining cold potatoes.
Today on the show, IPOs are back, and so is Hamburger Helper, at least in Shane's kitchen. What's going on, listeners? Hey, AJ, how we doing?
I'm doing great. Have you ever had Hamburger Helper, by the way? It's delicious. It's delicious. That was like a staple in my household growing up. Like, yeah.
Before we knew the dangers? Before we knew
What are the dangers?
It's like, I mean, I'm assuming it's a carcinogen.
Oh, it's not good for you? Oh, I turned out fine.
Yeah, just wait till those cells start metastasizing down there.
Yeah, about that.
Big reveal on the pod today.
Quick aside. I saw a nutritionist last summer because I was just eating like garbage, and I play a lot of golf and eat a lot of hot dogs on the golf course. That's just like an easy, quick snack at the turn. And I asked my nutritionist, like, I'm going to eat hot dogs. Like, how many is like too many hot dogs? And she looked me dead in the eyes and said, 1 hot dog a year is too many hot dogs. I was like, oh no, really? She's like, they are the worst things you can eat. They are like literally poison. They will destroy your body. Do not eat hot dogs. I was like, okay, well, let's settle on 10 per year.
It's one opinion. I was at the Mets game a couple weekends ago, and I got a lot of different opinions. So if we balance all those out, I think you're good.
Yeah, 10.
Yeah.
10 is the correct number. Yeah, cool.
Have you seen I Think You Should Leave, the show?
Only the clips.
I fixed myself a bowl of hot dogs. A hot dog bowl. Wait, what is in a hot dog bowl? A lot of hot dog comedy on that show. If you want to expand on hot dog related items, I would go down that rabbit hole. You haven't seen that show? It's very awkward. It's kind of Nathan Fielder-ish sketch comedy.
That's the one where it's like the zip line. Like I'm just.
That's the zip line one, yeah.
Yeah. I feel like I've seen enough clips that I get the gist of the show.
No.
Hilarious.
No. You're just seeing the top of the tip of the top. Anyway, where are you in the world?
I am in Brooklyn, New York, where it is about to be fall. It was like the first cold day this morning. I had a sweatshirt on my walk.
I'm wearing a waffle. It's waffle season. We're back.
Wearing a waffle?
For those of you not on the video watching this, I'm wearing a waffle as a hat and no other clothing. No, I'm wearing...
Speaking of waffles, looking at your background, you must be in the home of a baker, because I see a $300 KitchenAid stand mixer and a butcher block kitchen island. Like, this is a serious chef we got going on.
That is correct. Yep. Mikey Deegan, shout out to Mikey's Pies. This is a freezer just for savory meat pies.
Wow.
And you see, I can't tell if you can see...
Hamburger Helper flavor?
Perhaps. Maybe he should add one to the list. I think that would appeal to the Americans.
Free business idea here from the Liquidity Event.
Yeah, he's an Irishman, so he's in Ireland. I'm subletting from him. But can you see all these books here, by the way? I can't tell if you can see.
Yes,
those are
I can see all the cookbooks.
Pie books
about
making savory pies.
A pieberry of pie books.
I'm assuming that's funny. Is that a Kitchen Princess inside joke?
I don't
know. Dear listener, go Google AJ Ayers Kitchen Princess if you want to read some of her earlier work. If you want to see some of the
good luck with that, because I took it down.
Oh, the Wayback Machine spares no one. Don't you worry, sister. Once it's on the internet, it's on the internet. To many people's dismay. Okay, let's get into the articles. Anything else you want to share before we do that? We haven't been on in a couple weeks.
Yeah. Yeah, we were, sorry folks, we were not here last week. We were both in Austin, Texas for the XYPN Planning Network, I guess that's redundant, conference, which is, it's my favorite conference. We've been going to that conference, this is like our 6th year.
Yeah.
You and I first went back in 2018 when our cash flow was so poor that we shared an Airbnb in the bad part of town and witnessed a shooting, so that was fun. And spending money back then felt very dangerous to the business, even spending $50 on dinner. And this conference, we got to go see all of our friends who we've watched grow up with us in this industry, and it was really cool. We hosted a really nice dinner around the rooftop by the bats on the bridge in Austin. I thought it was really lovely. I had a great time.
Yeah, I love Austin and XYPN and all the members of XYPN. It was great to see new and familiar faces. We've had, I think, some good times at some conferences this year. Future Proof, XYPN. I've really kind of been lighter on conferences this year. What other ones have you been to this year? I feel like you've been...
I don't know. I can't remember what I had for breakfast.
I know, right?
Remember.
It's a bummer.
The next one we're going to shout out, let's give them a little shout out, because you and I are both speaking at the AICPA Personal Financial Planning Summit in beautiful San Diego.
They have a new name for it, actually. I'm sorry. Symposium.
Symposium.
Yeah.
Symposium, not a summit. Summit. I prefer symposium.
Yeah, it used to be limited to 100 attendees to make it very intimate, which it was. You and I have both been a few times. I think the new cap is 300. They're trying to make it profitable, so they changed the name.
I think I have a discount code if folks want to sign up for that, but I don't remember what it is.
Stay tuned on next week's episode of the Liquidity Event. We love cliffhangers.
But yeah, we love it. Yeah, if you're an advisor, I mean, I love that conference. It's from a tax organization, so a lot of the presentations and the work and the discussions are about like practice management. So if you're an advisor, that's a super fun conference to go to. I'm also going to try to play Torrey Pines, so I'm excited about that. Anywho,
glad we snuck that in. Great.
Anywho,
or the origin of I think our first conference we ever went to together, where we rode a duck boat and wore matching jumpers, which we spray painted for the TD Linka conference back in San Diego in 2018, maybe 19.
I believe that was 18.
AJ and I got drunk in matching jumpers and got one of those duck boats that drives into the ocean and floats around. And we were just drunk on, there was like no bar on the boat. So we were just in the back like, oh God, we made a huge mistake.
I think for the video podcast, we're going to need Ariel, our producer, to pull up some of those photos, because I have those photos.
Yes. Oh, great. All right. Good. Cool. All right. Well, so let's get into the articles now. We've done enough personal updates. I feel like just 7-ish minutes of that. The first one on the horizon for today is an article from The Information. IPOs roar back, injecting cash into venture firms, which is an article based on how we have been in an IPO winter for the past 3-4 years. And The Information really leans into this life cycle, I've noticed, with their articles, where they keep talking about how venture firms, they take money in from large institutions and very large investors and accredited investors and private equity and what have you, and they invest that in firms. They get the valuations going up, and hopefully there's typically a IPO, so they can actually ultimately return that money to the initial investors. And the theme of their articles tends to focus on the lack of cash flow and distributions from these VC firms back to their investors, because the IPOs, which is the ultimate final liquidity event, they've all been delayed. But we do have finally 7 venture-backed tech-ish IPOs happening in 2025, which is, I think, 7x what we had in 2023, maybe a smaller multiple for what we had in 2024 with some of those, Reddit, et cetera. But it seems like eventually we have to turn a corner. Like, there is an investment horizon. We can't just leave these investments invested in these companies forever. We need a liquidity event so that people can invest in other items and spread the wealth. AJ, what's your take on the article? What did you get out of it?
I got out of it that we're back. Our Slack was just like, we're back, baby. We've had a lot of clients over the summer have significant exits from these IPOs that we've been sitting on the sidelines for the past 3 years, just wondering what was going to happen. I mean, Figma is a great example of that. We had a false start with a acquisition back with Adobe in, 2021, 22. And so these employees have been had the carrot of an exit dangled in front of them, and like finally they got a successful IPO. And I believe the shares are trading up from IPO price as of now, and they're going to have an opportunity to sell some of those shares later this year once the lockup expires. So that's great. I feel like we've talked about this narrative before. It's the cycle of capital, right? We raise capital, we deploy it, and we expect a return on our investment, and then that investment most of the time actually goes back into new funds at those venture capital firms to fund the next wave of startups. So this writer is sort of trying to argue that like the dam, there's been a dam basically, and the pipes are plugged up with capital, and IPOs are the release. I think I had like a cat hair pipe analogy like 6 months ago on this podcast, so I'm gonna bring that one back. I think I have a drinking game proposal for you, Shane.
Okay.
Yep. This podcast is called The Liquidity Event. Yep. When we started it, we were in the middle of IPO bonanza, and every week we would go through an S1 and we would really dive deep into these IPOs. But throughout the IPO winter, or desert as some people call it, we have not had that opportunity. So I'm going to suggest that we move our recording time from 10 a.m. Eastern to 4 p.m. Eastern, and that every week we calculate the number of IPOs that have happened since our last recording, and we have to take that many shots.
I love that. I'm into that. I love that I just stopped drinking before you.
Okay,
but
well,
you know
anyway,
what?
if any fun person wants to co-host this podcast with me.
There it is. There. My bad.
We're looking for a new co-host.
Here's what, suddenly we're looking for a new host. I got someone in mind. 4 p.m., no. It's 10 p.m., yes. I am down with that. If we can move it back. The sun needs to be down for me.
What time do you think I go to
be
sleep?
Taking shots. We really need to discuss my business partner's hours of awakening. You go to bed before the sun goes down, I feel like.
Sometimes, not every day, but I enjoy that very much.
Going down before the sun goes down and waking up before the sun comes up is very military coded. I don't know what's going on there.
I just like the mornings. I love my precious mornings when the rest of the world is sleeping. Like I hold that space, so I protect that. That's my favorite.
Right. So you like when no one else is doing something, and then you always point at me and say, you're the weirdo.
I've never pointed you as the weirdo. You point at me as the weirdo. I think we have different preferences.
Own it.
I've never called you a weirdo.
Own it. You're the strange one when it comes to these. Anyway, there's 6 IPOs that we're highlighting here. We got Klarna, which is I think already happened this year, which was a 20-year-old. We have Figure, which was 7 years old. Netscope, I had never heard of Netscope before. Would you? Okay, me either.
Cybersecurity, right?
Yeah. Oh, right. That makes sense. 12 years old. They raised 1.4 billion from VC. Via. That one's 13 years old. Gemini, which is somehow not related to Google.
Yeah, there's a bunch of Geminis out there. Yeah.
Everything dear listener, we made the huge mistake of naming our startup Gem, thinking that we would get a 3-letter startup name. Huge mistake. As soon as we started selling it, I was at a party in Mexico City, and some girl was wearing a logoed Gem shirt. I was like, "What? Where did you?" She's like,
"Yeah, it's like an HR. It's like an HR."
She's like, "Yeah, we have like 800
platform.
employees." Yeah. I'm like, "Oh, sick. Well, it looks like we're changing the name."
Yeah, they bought the .com for sure with that buku VC bucks.
Right. And then StubHub as the 6th IPO that is venture backed in terms of for 2025. So we're back, or at least we're trending back. I don't know if we're not going to probably ever be back to where we were in 2021, but getting back to the average of the late aughts or what have you. Okay, moving on from IPOs. Is there anything else you want to touch on in that article, considering IPOs is our specialty? All right, well, now we'll circle back around to the Hamburger Helper article. And the Hamburger Helper article comes to us from the New York Times. I'm not sure it's the cooking section or just more like the economic section or what have you. I don't know if sections really matter. But it just discusses the recession indicator of the uptick of people purchasing Hamburger Helper, which is notoriously bad for you and bland in terms of flavor, but also can really help you stretch your dollars when it comes to feeding your family. A pound of beef becomes a family of 5's dinner. AJ, your take on this article?
Well, a few things.
Yep.
First is I'm a big fan, as you know, of the high-low lifestyle. Mm-hmm. So I'm a big fan of Hamburger Helper and products like it. which is that things that don't cost a lot of money that bring you a lot of joy are like the key to financial success. Because being able to generate happiness in your life from something that costs, I don't know, I saw Hamburger Helper on sale for, I think it was like $1.99 for a box at the grocery store down the street from me. So that's great. This article quoted sales of sweet treats like ice cream, cookies, and cakes are down, according to some research firm. Is that because people are poor, or is that because they're on Ozempic and they're buying fewer unhealthy items?
Good question.
Question mark.
Mm-hmm.
Question mark. Also, so Hamburger Helper, notoriously bland. I have a solution for America's health problem.
Let's go.
It is, listeners on the video, I'm holding up a small spice jar by a company, La Flor, which is one of my favorite spice providers. It is ground comino, which in English is cumin. This little $1.99 jar can fix most of your problems. Hamburger Helper, boom, flavor explosion. So invest in this. With the tariffs, I don't know. This might not be $1.99 anymore. I believe it's imported. So maybe that's not the silver bullet solution that I thought it was going to be.
Definitely imported based on it having a Spanish title. Can you imagine some lady at Walmart? What in the hell's cumino?
What's camino?
What in God's goddamn little earth we got here?
Camino, isn't that the name of the planet in Star Wars that
you would know.
Obi-Wan goes to get the clones?
You would know.
Camino.
I've never fallen down the 27 movie rabbit hole of the Star Wars universe, unfortunately.
Anyway, it's bland. Budgets are tight. This is a solution. So, is Hamburger Helper a leading indicator that people are running out of money, or is it that and people are just spending less money on groceries because groceries are something like 20% more expensive than they were a year ago across the board. This is really where the people below the poverty line really feel inflation. You and I are like, our martini is another $2. Like, that sucks. Wow, it's so expensive, but that doesn't dramatically impact my life. This is really folks who are just trying to get by, and this makes me sad that Hamburger Helper is what we're having for dinner.
Cancer for dessert. It's funny reading this article. Purchases of rice are up 7.5%. Distressed shoppers also buying more cans of tuna, salmon, and sardines. Sales of beans and boxes of macaroni and cheese are also strong based on data. And I'm like, am I a distressed shopper? This is my.
I know. I was like, actually,
this is
like a nice sourdough with some fishwife sardines, a little Rancho Gordo cannellini bean.
Yeah. Yeah, I've been eating canned tuna since college. I've never made it out of. Yeah, I don't mind it.
Oh, sorry. I think you haven't eaten it.
No, I do eat it
all the time.
Yeah,
Yeah.
Yeah. There we are. Okay. All right. Any other recession indicators we should discuss? I mean, I think embrace the rice and beans, people. I think this is unfortunately. I mean, focusing on there's like yellow 7, like the carcinogenic aspect of it. I just wanted to eat rice and beans. Don't eat this shit. What are we doing here? This is chemicals from DuPont that are engineering bland flavor that are going to kill you. Please don't do this to yourself. Speaking of hot dogs, or maybe sprinkle some hot dogs in there while you're at it.
Everyone needs a little protein, right?
Fuck it. We're all going to die soon. All right. Next article. Is focusing on AI. We have to have an AI article because it is 2025. We have an article from the Financial Times. America's top companies keep talking about AI, but can't explain the upsides. All right. So this article is all about how, there is the Magnificent Seven, NVIDIA, Tesla, Microsoft, Meta, Apple, Amazon, and Alphabet. Are driving the majority of the stock market's gains. They're also all heavily invested in AI and or data centers and or have a ton of coders that work there. Therefore, they can cut the bottom line of their companies by employing one of the main use cases of AI, and that is coding. Are all way up and pulling the S&P 500 up with it. The S&P 500, I believe, is up 20 to 20-ish% on the year. Don't quote me on that, but it's doing well. But the Magnificent Seven themselves, since 2023, have had insanely massive gains, at least relative to the S&P 500. And the article is all about how SEC filings and the mentions of AI within them, both negative or positive. AI, what was your takeaway? AJ, what was your takeaway? Is it an AI takeaway? Did you have AI write AJ's takeaway today?
I did not. I mean, this is how I feel. I thought this article did a really good job, like showing data for a kind of a feeling that we have as business owners, which is every conference you go to, everyone's talking about AI and this AI powered tool and AI this and AI that. And when you lift back the curtain, AI just means feeding existing information that we have into a large language model and spitting it back out to us with prompts. And that's cool, I guess, but I haven't seen a major business use case for it. So this article kind of dives into the statistics and says, okay, they said AI was going to revolutionize everything. We could cut our workforce by 30, 40% in some places and, increase profits dramatically. But these big companies, they don't attribute their growth to AI. So that's what we're seeing here. And there's a lot of risks, right? There's a lot of pros of AI. It could potentially, it's a lot of potential pros here, right? Potentially make everyone more efficient, potentially make things faster, potentially make labor cheaper, potentially this. But those are all once we get going or once we implement it, right? Whereas the cons are cybersecurity risks. Like these huge companies putting their customers' data into these models is very risky. Some of the other cons, just like a failed rollout, just like poor adoption, not educating your workforce on how to use these tools. You build your own custom GPT, you hire an AI consultant, you hire a firm, and then your 30,000 employees are just like, I don't want to use this. I'm just going to keep doing my job the way I know how. So failed rollouts is another kind of that's like a big biter into the margin, right? You make this big investment up front and where's the outcome? We haven't gotten a chance to see those. I think we will start to see those. I just think it's going to take a lot longer than everyone thought, right? Like ChatGPT feels, as the end user, it feels so instant. It's like, oh, here's my instant use case. Whereas when you do a big rollout like this to a larger company, it's just going to take longer.
Yeah, there's a lot of things that are really interesting in here. I mean, we talk about AI all the time, and you and I are often asked to speak on AI, and I think we get really focused on the retail level use of it. We talk about ChatGPT a lot, which has seen a lot of fun features rolled out: temporary mode, deep research mode, agentic mode, the projects, instructions, all that fun stuff. I am really curious what's happening on the B2B data center, the big level, within these giant companies, the Fortune 100. One thing I noticed from the article that I hadn't really considered was the guys, not just the investments that are being made in the foundational models, so to speak, but also the people building with the picks and shovels, so to speak. So Caterpillar's stock price is way up, and commodities prices are way up because of all the data centers that are getting built around the country to handle this. I'm really hoping that with all of this demand for energy that we're seeing from these, that we finally get a turn in the energy production in the United States, and we finally get nuclear at scale. Do you have an outcome that you'd like to see from all of this?
Yeah, Chernobyl too, for sure.
I saw a funny headline about this.
Sorry.
Somebody was like, no, I mean, people, it's like a phobia, honestly. The definition of a phobia is an irrational fear. And of course, Chernobyl and 3 Mile Island and Fukushima have happened, but across France has 100 nuclear reactors, and
totally. I'm with you. I am long on nuclear power.
Yeah.
I think it makes sense. It's super efficient. It's cheap, all of the above. And we just need better safety standards. And, it's interesting thinking about I'm kind of obsessed with Chernobyl, but
you are.
Just thinking
you
about
do have an unnatural obsession with Chernobyl.
Yeah. What's the opposite of a phobia?
An obsession.
Obsession. Yeah. But just thinking about what went down in the control room. Could AI is actually a great use case for regulating something as chaotic and so many different outcomes as a potential nuclear meltdown. Anyway, what outcome would I like to see from AI being used at scale in these companies? I think the idea of getting people the information that they're looking for without having to give up personal data, I think is going to be a potential use case that's going to change a lot of people's lives. Hey, I want to renew my driver's license. I don't want to sign up for your stupid list. I want to be able to sort through all the garbage. Hey, agent, find me the best. I guess you have to go to the DMV, but I need to expedite my passport. Find me the best solution here. You have all my data. You're my basic personal assistant, and then companies can then bid for that direct access to me, the consumer. Like, I do think it is going to be this great way to connect vetted companies with the consumers that need their products. And I think that's going to be a way that we're going to potentially monetize this, kind of like cutting through all the advertising in a weird way. Like AI, the way that you're going to be able to train your agents or your bots or your avatar will basically say, like, these are my preferences. Don't show me an advertisement for something that I don't want or I don't need. Like, I already know what I need, and you're going to help me find the best option based on this set of, demands that I put in.
Gotcha. So yeah, like faster information routing, less noise, more signal. I'm with you. All right, cool. Last article we have today, before to squeeze her in, is I see somebody added an article today. Something was on her mind. I think somebody was procrastinating this morning when reading about AI and decided to go down a little credit card rabbit hole. Who amongst us cast the first stone if you've never decided I need to explore the benefits of the Amex Platinum? Today we're going to review the Chase Sapphire Reserve, the new one that is charging $800 annual fee, and the costs and benefits. It seems like you've done a bit of a dive into it. Off the cuff, I'm a big credit card fan as long as you do not actually carry a balance. Of course, you're going to say the same thing. I found a fun thing. Did you know that the people that work at these credit card companies, they have a name for people that pay off their balances every month? We talked about this.
Remind me?
Huh?
Yeah. Remind me what it is.
I think it's not losers. It's like bums or something like that. It's like I'll remember it. Give us your introduction to the credit card.
I mean, like with I love rewards credit cards as much as the next person. I personally have, I think, 10 credit cards across business and personal. Some of them I use all the time. Some of them I just have because of a very attractive bonus once upon a time, and I want to refinance my mortgage soon, so I'm not closing any of my credit cards.
Deadbeat.
What? I'm a deadbeat.
Deadbeat.
Yeah, that's me. I am definitely a deadbeat. I always pay off my credit cards. Look, I think if you use the perks, if you travel as much as I do, which is I'm in an airport, some months it feels like every weekend, I'm using the lounges. Not having lounge access would be painful in my life. So I am very, very happy to pay $800 one time for access to these lounges. And if you take Ubers, there's an Uber credit. If you book reservations through Resi, there's a Resi credit. So like the fee basically gets wiped out. But just remember, folks, like the credit card companies always win. So yeah, they're not making money off of me, the deadbeat. They're making money off of the people who go, oh, I want this fancy credit card. I want the 125,000 point bonus, which is one of the biggest ones we've seen in a long time. I want that bonus, which is, a free flight to Europe or however you want to quantify it in your life. And then you got to spend $6,000. Well, were you going to spend that $6,000 anyway? And it costs you $900 to get those benefits. I don't know, folks. I think you have to be already comfortably spending a lot of money to use the benefits here. I think this is a lot of like, it's an aspirational card, right? It's like a Birkin. It's like, do I need one? Or it's like all of the wealthy, successful people seem to be walking around with Birkins. Everyone's got a Chase Sapphire card or an Amex Platinum. I got to get me one of those.
Yeah, I mean, I hear you. I think it's fine to have this as long as you are taking advantage of all of the credits, right? The $300 travel credit. So that means that this thing only costs you $500. And then you've got, I don't care about the points. Ignore the points. Just look at the credits that you get. If you have Apple TV, StubHub, Lyft, $10 per month in Lyft. If you have a Peloton membership. If you do all those things, the thing is free. And then you put all your things on, all of your purchases on the card, and you get the points, you pay it off, you be a deadbeat. And
ooh, Peloton. Oh, I didn't even see that.
Yeah.
So it's like, so it's not a free, it's just $10 a month off. So
yeah.
Peloton membership's $40, so you get it for $30. So yeah, $120. There you go. Let's knock that off the fee.
Yeah.
But I'm already using it, right? If you're using this to then get a Peloton membership, which is not going to fit in your budget, then you're going to not be a deadbeat. You're going to have credit card debt.
I booked a whole trip to Japan on points earlier this year. Probably saved me a few $1,000s. I think that sweet. Points in the hands of what's up?
Except you and I have a cheat code, which is not fair for the average bear, which is that we run a business.
Money is our profession.
Yeah, right. Well, that we know everything and we're always right about everything, which really helps folks. But no, that we run a business, and so all the software costs, all the shit we buy for our 20 employees all goes on our credit card, so we personally get to reap the benefit of this point. So that's, if you do run a business, get one of these rewards cards for sure.
Yeah, that's a no-brainer. Cool. All right. Well, 29 minutes in. We have some Reddit questions that we'll be saving for next week's episode of the Liquidity Event. Thanks so much for listening. Email us your financial problems at liquidityevent@brooklynfi.com. And finally, any of you stans can leave us a review if you want to be weird about it. Thank you so much, AJ.
Great to see you, Shane. See you guys next week.
Bye.